Good morning, everyone. Today we will start up the new chapter. In this chapter, we will introduce the fundamental functioning of a simple economy. Here we will describe some primary ideas, how everything works, and also will describe how we can view the national income. Here, the chapter is National Income Accounting. First, we will see what is national income. National income, here it is given the aggregate. Aggregate means total or sum. Income of the entire economy. So, simply I have given here. National income is generally defined as sum total of all the final goods and services produced in a country in a year. It is called as national income. And in this chapter, what are the things we are going to discuss? Let us see how this aggregate income, that is national income, is how it is going through the sectors of the economy means in a circular way. Circular means this is a circle. The national income is going through different sector in a circular way. We are going to study about that. And also in the same section, it will continue. There is a 3 ways to calculate this national income. Okay, to calculate this national income. So, what are the method to calculate the national income? Number 1, it is called as a product method. Number 2, it is called as income method. Number 3, expenditure method. There are 3 ways to calculate the national income. So, all that we are going to discuss. Also, we are going to discuss about this national income can be described in some other categories also. Like you people would have heard about GDP, right? In most of the ways, in most of the time, we used to say about this GDP. That is the alternative way of national income. National income, we put it in term of GDP, GNP, gross national income, gross national product, national income, per capita income. Okay, like this many things like a consumer price index, wholesale price index. Okay, and all this we are going to discuss in this chapter. And also along with that we are going to discuss about what are the problems we have in calculating the GDP and what are the indicators of the aggregate welfare of the people of the country. All these things we are going to discuss in this chapter. Now, this is the basic introduction of the chapter. Okay, now we'll see. Already we studied about one of the major pioneer of the subject economics, that is Adam Smith, and he has written a book which is called as an inquiry into the nature and causes of wealth of nations. So in this theory it speaks about nature, it speaks about wealth of nations. Okay, now this concept is related with what generates the economic wealth of a nation, how the wealth of the nation is generated. So what makes the countries rich or poor? There are some of the central questions of economics. It is not the country which are endowed with the bounty of natural wealth. See, some countries will have a lot of natural resources and some countries will not have rich natural resources. For example, if you take Africa, Africa is very rich in natural resources. And always we think about rich country means we think of America. But in Latin America, many poorest countries are there in the world in the Latin America. Right? So whereas many prosperous countries have scarcely of any natural resources. For example, if you take some richest country, they will not have much natural resources. If you take India, Africa and all, it is rich in natural resources, but the country is not rich. Okay, and here it talks about the resources was the most important consideration. Okay, resources, natural resources is most, without resources are the main thing. Only with the help of the resources the national income can be converted. So we give lot of priority for the resources, had to be transformed through a production process. See, some countries will have the economic wealth or a well-being of a country does not necessarily depend on mere possession or resources. See, if you take some of the richest country, okay, if you take Arabic countries, there we don't have much natural resources. Only resources available is petroleum product. All other things, it is imported. Okay, so it is not described only with the help of the resources. We are not describing how the country will be. The point is how resources are used in generating the flow of production and how the consequences, income and wealth are generated from this process. Okay, how the country is going to meet all this and how the income is generated, that generated income, how with the limited resources, how it is going to distribute to all the people. About all this we are going to discuss in this chapter. So this is all about the introduction of national income accounting. So now we'll discuss about some basic concepts of macroeconomics. So here we have to know these concepts, because in national income accounting we will use these goods. Okay, for example, consumption goods, intermediate goods, capital goods and final goods. Some basic concepts. We'll see what is that. Okay, one by one. First we will move towards which is not given in the listed of some basic concepts. See, public goods, you will understand what is consumption goods, capital goods, intermediate goods, final goods. Okay, so to understand that we have to know what is public goods also. So there is a difference between economic goods and a public goods. Economic good means, for example, pen. If I want to buy a pen, I don't get it in a street, I don't get it in a roads, I don't get it in the sky. I have to go to the shop, I need to pay the price and I have to get the commodity. So to buy a pen, I should pay the price. To buy a book, I should pay the price. To buy a clothes, I should pay the price. So whatever the commodity we buy for the price, such goods are called as economic goods. And certain goods which we don't pay, that is called as public goods. For example, the public goods are commodities or services that benefit all the members of the society. So what is a public good? It may be a commodity, it may be a services, okay, which will benefit all the people. See, here I have given some example of public parks. Whether public park belong to any individual? No. Public park means it is enjoyed by everyone. And drainage system. Who will clean all the drainages? It is given by the government. And street lights, who will do that? Government. And police, laws, justice, it is all framed by the government. So who will supply the public goods means it is obviously government. And the government benefits all the members of the society in a common way, okay, in a common ground. It is provided by the government. How the government is creating a public park or a drainage system, how it is maintaining street lights, dams, constructions of roads, law, justice, all that how it is doing through the taxation. And it is spending once again for the people. That is called as a public goods. Got it? Now we'll move towards one by one the basic concepts of a national income. Okay, here the first one we will discuss about the consumption goods. Goods which are purchased for a consumption, or consumption goods, or a consumer goods. Okay, so for example, I wanted to have a meals, food for the lunch. So I order a food. What is that? That is consumption. I want to buy breads or whatever. Here some of the commodities I've mentioned here. Okay. So these goods and all, it is called as a consumer goods, which are used by the consumer for the consumption purpose. The goods, if I am purchasing for the consumption, such goods are called as a consumer goods. Okay. See here some of the example which is given. The food, clothes, services like recreation, that is all consumption. For the consumption purpose we use, such goods are called as a consumption goods. Okay. So in the goods we also have a types of goods like durable goods and non-durable goods. Durable goods means which last for some period of time. For example, here I have given some gadgets. Okay. So this gadgets is not very quickly or easily decay. Okay, which we can use it for a longer period of time. Such goods are called as a durable goods. And what are the non-durable goods? Non-durable goods are like clothes and eatables, vegetables, fruits. These are all the non-durable goods. Okay, which we cannot keep it for very longer period of time compared to this commodities. Okay, these are the durables and these are non-durable goods, which non-durable goods which perish soon. This will last for longer. Such goods are durable and non-durable goods. Okay. So consumption goods means the consumptions, the goods which are purchased for the consumption. It is called as a consumer goods or a consumption goods. Next we will see intermediate good. So what is intermediate good? Goods which are produced by some producer and used by some other producer. For example, X and Y, these are the producer. For example, here it is given intermediate goods or ingredients, components of finished products. Okay. So here the salt. Okay. For the bread, salt is required. Salt is used by the baker to bake a bread. Okay. And the same salt is used by our households to use it in a kitchen. Okay. Our mother or father buys salt for what purpose? For the household purpose. That become a consumer goods. But if the same goods is bought by the baker, okay, and he is using that good, means it becomes a intermediate good. Okay. So the intermediate goods are, these are the goods used by other producer as a material input. Such goods are called as a intermediate good. So X produced salt and Y produced bread. So this good produced by one person and that good is used by another producer. Such goods will become a intermediate good. Okay. So next one we'll see capital goods. So the capital goods which are used in the production of some other goods. Okay. Here we have some machineries are there. Here are all some machinery goods are there. Okay. And there are giant companies are there. Okay. Some giant companies. For example, I'll take an example of tailoring machine. So tailoring machine is produced by some company. Some producer have produced it. Who's using that? Tailors are using it. Have you understood? Tailor machine is produced by some company, that by some producer, and used by some other producer. Okay. The tailoring machine is used by the tailor to stitch a cloth. It may be a tool or a machinery or a implements which is used for some other purpose, some other producer. Okay. For example, I'll tell you car company, Ford car company. The Ford car produces the Ford car. And that car or any car you take it. And the taxi companies, they purchase the car and they give for the rent. They hire the cars. At that time, the car is manufactured by one company but used by the traveling companies, traveling agencies. At that time, that goods which is produced by one person used by some other producer, such goods are called as a capital goods. So these are the durable goods. So already I told you what is durable and non-durable. So these are the durable goods which are used in the production process. Such goods are called as a capital goods. Okay, so the next one is final goods. So what is final goods means? The goods which are purchased for final use are called as final goods. Okay, so these goods will not transform, will not be used by some other. For example, I wanted a watch, I go and buy the watch. That becomes a final goods. It will not pass through any more stages of production or transformation. Okay, so here is an example, I give it here. Here is a tree, and the tree are cutted, and that trees are given in a industry. In the industry, it is converted, the tree is converted into any kind of a furniture, and finally it becomes a cupboard or a table. So this tree is a natural resources, that is by using the artificial environment, it is manufactured in the industry and converted into a different varieties of goods, and finally it is coming out as a final goods. Okay, such goods are called as a final goods. That's why it is here given like it is meant for the final use, and it will not pass through anymore. After becoming a table, it will not be converted into any other object. Okay, so while manufacturing, it can be converted into a bureau or a benches or a sofa or any other commodity, any object. Once if it is converted into a final good, it cannot be converted into some other thing. Okay, so why we are discussing about this different types of goods means, like consumption goods, capital goods, intermediate goods and final goods. This final goods, for example, to say television, wristwatch, sugar, car, etc. These are the final goods. Once these goods are sold, will move out of the active economic flow. While calculating the national income, the value of the only those final goods value only will be added. Okay, here intermediate good is given. Which is intermediate good here? This intermediate good cannot be calculated in the GDP. While calculating the GDP, we'll consider only the final goods value, not the intermediate goods value. So it will come, once the final goods are sold, it will come out of the economic activity. Okay, and only those final goods and services which enter the market is added. Okay, such goods are called as a final goods. Then the question will arise whether the good is a final good for all the purposes. There are several goods which are used in a kitchen for cooking. For example, sugar. So sugar is purchased, that is a final good. Purchased by a household, sugar will become, for what purpose we use? For coffee, tea, and to make some juice, or to make ice creams, and to make some sweets, we use the sugar. At home, it becomes a final goods when we buy a sugar. But the same sugar, if it is purchased by hotels, in hotel what they'll do, they'll convert into some other dishes, and that dishes are put for a sale. That sugar purchased by the hotelier will become an intermediate good. At that time it is very difficult to calculate. So restaurant people will buy, resort people will buy. So at that time the good, whether we cannot make a clear cut picture whether the good is an intermediate good or it is a final good. So thus whether a good is a final good or depends on the use for which it is put. Okay, now we can get a comprehensive idea of the total flow of the production in the economy. Okay, so these are all some basic concepts of national income. So from tomorrow onwards we will be discussing about the few more topics. Thank you for watching.